All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has been in a slight bearish run, and it has been struggling with the tug of war up and down, as we can see it. And there's some important numbers here to look at in this whole entire time frame after the recovery from 308 and falling from the highs of 538, and the highest peak was up here at around 465 and the lowest point was 351, and we're playing of in the middle of it all at 407 currently and below the 50-day moving average. So bears have been dominating this lately in the last couple of weeks. It rises up, it falls down, it rises up, and we're going to look at what's important because the bulls haven't been able to hold themselves up once they break through resistance and it falls again. So let's see what's important for tomorrow. Pay close attention to these numbers and see what to expect in the next coming days. Obviously tomorrow is Friday, the end of the week, and we want to pay close attention to how this is reacting for tomorrow. The 50-day moving average is 413.63. I won't be able to land exactly on the cents. Sometimes it gives me a hard time, but I was able to do it. 413.63, super important number. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. So right now the bears are dominating this, and 413.63 needs to be crossed by the bulls to reach newer highs. If they accomplish that, they're going to want to break through resistance, and that's 415.87. Turn 415.87 into a support, break away from it to pull further away from the 50-day moving average in an upward direction. So super important for the bulls to keep that in mind and aim towards that goal. If they accomplish breaking through 415.87, they accomplished two things. They got themselves back into bullish territory, they got to pull away from it, they created a support above it, and now they can hit newer highs and new resistance levels. On the other hand, we're really close to this, and this is our support here. And let me go ahead and get this to the T here. It's not that big of a difference from where we're at. We're currently at 407.56, and our support here is 407.20. We're talking about literally cents of a difference. 407.20 is our support. If that gets broken through, this could be on its way down to newer lows, and since this is so close to the current price, I would use yesterday's lowest point right here at this point, and it's down here at 404.12, just to round it down, 404.10 cents, and if you want to round it up, 404.20 cents. Anywhere in that area of 404, getting closer to 404, about to break through it to hit 403.90 cents and some change. This could be on its way down to newer lows, pulling further away from the 50-day moving average. But before getting there, the first support level is right here at 407.20. This could be on its way to newer lows if it breaks through that, and it could hit newer support levels and break deeper into bearish territory. So I want to emphasize, pay very close attention to how this is reacting and how quickly is it getting closer to the 404 range / 403 in the high 90s to see where this is going, and if the bulls are trying to reappear and bring this one back up to stop it from falling to newer lows. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for. to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it. And thank you guys so much for watching, and let's make some money.